This is the panel on regulatory policy and enforcement actions and trends in commodities trading. So I'm Tobin Kearn. I'm the CEO of BroadPeak. We're a company that does data integration and compliance work for the commodity industry. But before we go ahead and introduce the other panelists, we're going to start with a poll, the results of which are going to be tabulated as the panelists introduce one another. So without further ado, do you guys want to put up the poll? Okay. What regulatory area do you see as the greatest challenge in commodity trading today? So everyone take 30 seconds. Think about it. Introspect. Vote. Okay. And we will have the results of that in a few minutes. So without further ado, do the panelists want to introduce themselves?
Good morning, guys.
Is that working?
Good morning, lovely audience. I'm Elina. I'm with BP.
It's working. Okay. Good morning, everybody. My name is Milena. I work for El Paso Electric.
Hi, Eileen Merrigan. I work for Freepoint Commodities.
Good morning, Michael Brosius. I'm at Mitsubishi Corporation, and I'm the Division Compliance Officer there.
And I just want to start today off with a quick disclaimer that while we've got a panel of experts here whose personal views are informed by their experiences, any views spoken today by any of the panelists do not necessarily reflect the views of their employers, past or present. Okay, let's see what the results of our poll was. RINs and ESG. Okay, maybe the panelists can think about a way to incorporate RINs and ESG into our talk today, given that seems to be popular demand. That's honestly not the result I was expecting, but we'll see. Okay, let's go ahead and begin. So what are the goals of this session? We want to take you through some high-level topics. So we're going to talk about trends in enforcement. So there's several different enforcement agencies, as you all are likely aware, in our space, including the CFTC, the DOJ, and FERC. Panelists are going to talk you guys through trends in enforcement by all the above agencies. We're going to talk about trade surveillance and how people are changing surveillance strategies to proactively preempt enforcement actions, ensure that they're in compliance. And then finally, we'll talk about something that's especially prevalent today, which is trade compliance. How do you import with confidence in today's tumult of trade, which Michael has some detailed thoughts on. And so without further ado, let's turn it over to Eileen to talk about DOJ white-collar enforcement.
Oh, yes. The DOJ. You should all be afraid of them. As the criminal enforcement authority in the United States, they're the ones that can send you to jail, as well as fine you a lot of money. But with the current administration, there's been some priority changes, right? So early on in the administration, there was a pause on the FCPA, and that has recently been unpaused as of last week. But it's been clear that the DOJ is now changing the focus of their priorities, right? They're looking at exploitation of investors and consumers, right? The American people, as it were. The evasion of sanctions. Certainly anything that is related to money laundering or basically the detriment of the United States. Bribery actions that undermine the national security, so terrorist relations, drug dealing, those kinds of things. And then trade tariff and customs fraud, which Michael's going to get into a little bit later. There are some other elements of the DOJ that they are encouraging from the consumer public side. They really want more whistleblowers. They're looking for people to inform them of where they should look into fraud. They are actively encouraging self-disclosure, right? So they and other enforcement agencies really want companies and persons to come forward and disclose the elements of either fraud or misappropriation, anything along those lines. And they have outlined ways that you can reduce your fines related to that, reduce anything detrimental to your own company, those kinds of things. They have gone through a period through the last 180 days where they've reviewed monitorships. They have gone through deferred prosecution agreements, and they've basically terminated them early, right? Glencore is an example. A couple other ones, that Stericycle was another one. So they've gone through and they've determined that those particular actions don't need continuous monitoring. They will no longer pursue extensive monitorships. And they are going to be relying on foreign agencies to enforce their own laws. So that came out last week, where the DOJ will be enforcing the FCPA as it relates to national security, those kinds of things, and they will let foreign enforcement agencies do more of the lifting. So if you see some of the ones in the past where you've had fraud cases on both US soil and foreign soil, that might be more foreign enforcement authority driven than US. The US will certainly help with any of those, but they want other agencies to take up some of the slack. That said, we still don't really know what's going to happen with the DOJ going forward for the next 4 to 6 years. I encourage everyone to follow all the rules that are in place. Regardless of being paused on enforcement, statute of limitations will extend beyond this administration. So please tell anybody who you are working with to please continue to obey the law, because that can always come back to us. But their whole department is in flux. There's all sorts of departures and movements around in the Department of Justice. And that's basically it for me.
Okay. So, Elina, do you want to talk about CFTC Enforcement Division reorganization?
Sure. Good morning, guys, again. So with the tumultuous markets, we've seen enforcement division reorganization. We talk about reorganization, we talk about priorities, right? So there's been, in the past, there was vigorous enforcement from various regulatory bodies. But in March of 2025, just this year, Chairman Pham announced an enforcement sprint. And I think Eileen sort of touched on it, but the CFTC would refocus the Division of Enforcement's resources on just fraud cases. The agency would move to resolve certain enforcement matters not involving alleged market abuse or customer harm expeditiously. And this is 30 days, right? So that's quite a change. This means that firms will open investigations. They could see the investigations closed, the ones that had been open previously, and been issued closing letters in order to begin closing open investigations. Again, this is a change from what was before. What could be potential outcomes? Any regulatory agency clearly can refer and has referred to an outside regulator. So the CFTC can trump the SRO, the DOJ can trump FERC. All regulators can refer to one another across jurisdictions, right? How can firms stay ahead when all cases are literally referred to outside jurisdictions, right, and agencies? One thing firms can do is to stay abreast of the NFA's hot topics. So if you attended the NFA annual, for example, I don't know how many people did, but there were many people there. There were probably over 300 people there this year in March. They really focused on, transaction surveillance, risk management. You're going to want to definitely focus on the things that are the hot topics for the year. And they talk about those hot topics, and they highlight them and underline them over and over again, right? What else can you do? You can attend industry meetings, inclusive the annual that I just talked about and the FIA conference. So it's super important for regulatory people to keep up with trends and to actually be ahead of the trends. What has been the impact, on compliance departments, ethics and compliance departments, regulatory departments? The impact has been that personnel has seen a substantial uptick around daily work. So that's good for us, right, as regulatory compliance officers. But we need qualified people who know the regulatory space. And specifically in and around exam dates. So like when you get that first day letter and there's that panic like, oh my gosh, it's really important to have, good people in place who know exactly, what they're looking at and how to answer. Like for example, the NFA, specifically in the questionnaire, they discussed, we want to make sure that you're consistent with what you had answered before, over and over again. And they said there's going to be additional information, but just make sure that if there's any differentiation or deviation from what you had answered before, you need to explain those things. And we don't want to see 10 different attachments. We want to see one document that has all of the changes all together with explanations. The more that you throw at the regulators, the more they're going to keep questioning, right? So you need to make sure things are consistent and in line with what they want. Okay, next slide. Oh, go up a second. Awesome. Another thing, right? So Acting Chair Pham has consistently and repeatedly stressed that the CFTC is going back to basics, right? But what does that mean for ECPs? What does that mean for market participants, as seen from the Division of Enforcement? Back to basics means, you know, business practices, reporting, risk management, adequate compliance programs, especially with the rise of AI. They want to make sure that everything is sort of like copacetic, right? You can use AI, but you better check it, right? They stress that over and over again. Whatever you're submitting needs to be checked over and over again, right? They're looking at deceptive conduct, right? So manipulation, spoofing, misappropriation of material non-public information. All the things they were looking at before, the same lens, but looking at it more closely, right? Going back to the basics of deceptive conduct. Consumer protection, that's one of the goals that they set, right? Increasing scrutiny on instances of perceived fraud and or investment schemes. Digital assets, right? Anti-evasion, intermediary liability, money laundering, supervisory claims, like all these things, they're looking at as a hot topic this year, right? And probably going forward for the next 2 years. Transaction surveillance, as always, has been a hot topic. And investor protection, right? So all of the Dodd-Frank protocols, the EBC, the IBC, which of those have been removed? Really not many, right? So they're still sort of focusing on those things. Did you give your pre-trade? Did you give your post-trade? All of those details need to be sort of clear and cut, clear-cut and very crisp, right? And that's about it, I think, for me.
Okay. Sounds like the scope of what we need to comply with is ever increasing. So, Elina, do you want to talk about, sorry, not Elina,
It's Milena.
I'm sorry, Milena, sorry.
I can also.
Yeah, go for it.
I can also speak a little bit about the ESG from the poll. So 2 years ago, everything was ESG, right? GSG protocols, everything was scope 1, scope 2, scope 3. These days, renewable energy, specifically with voluntary markets, compliance is still intact because of regulations across the state, but in general, ESG is not popping up as a word that's used every other sentence, basically. Okay, Milena.
Good morning again. So my presentation comes from the perspective of a vertically integrated utility. We do physical transactions for power. So we sell excess, what we produce, and we buy when we need it, and that's kind of the basic of our operation. We also participate in Paso's imbalance market since 23, so almost 2 years, and we have compliance obligations there. But we don't do, any forward speculative trades that fall within the CFTC jurisdiction. So I'll talk specifically for FERC because that's where most of our compliance obligations lay. And I'll start with the first slide is FERC's composition. And the reason I have those faces there is because the chairman sets the agenda for the commission. And whoever the chairman is, that's the person that sets the priorities directly flowing from the chairman to the Office of Enforcement and all other offices, including the General Counsel, which also helps when there is enforcement actions. So the current chairman is Mark Christie, but his term expires at the end of this month. And the Trump administration already said that he'll be replaced by Laura Sweat, who is an attorney. She works for the law firm. She used to work at FERC in different capacities, including as an advisor to one of the former commissioners. But she's young in general compared to, some of the prior chairmen and commissioners. So it will be interesting to see. What Chairman Christie did not do since he became the chairman now in January, is he did not change the enforcement strategy. He has not said anything will change with respect to enforcement. He has not made public announcements that there will be more loose enforcement or more like risk-based, which is kind of a code word sometimes that will change the way we assess risks, and therefore there will be less enforcement or more enforcement, depends on who the message comes from. He said we'll uphold the law, it is what it is, and we'll just continue to operate under the existing regulatory structure and the law that applies to us, the Federal Power Act, the Gas Act. Those are our, that's what we have to do. And he's a lawyer coming from the State Commission, so very strict kind of interpretation. What Laura is going to do, we don't know. The administration hasn't really said whether she will be the chair or she will be just a commissioner. They all have the same vote, so she doesn't have like a tie-breaking authority or anything. They all have the same, carry the same vote. Commissioner Rosner, he's a Democrat. He'll probably stay there. His term expires in 2028. He's a really good politician, so he'll probably stay there. Commissioner C, she has a litigation experience. She used to be the Attorney General for West Virginia, and she was actually appointed by the prior administration. She's Republican. And Commissioner Judy Chang, she is a Democrat, and people kind of don't expect her to stay there. This is all to say that there are 2 Republicans and 2 Democrats. At this point, it's a 5-member commission normally. Now it's 4, so we expect there will be another person. So you have 2 Democratic votes and 2 Republican votes, and some of the stuff might not even pass through the commission in general. Now the enforcement actions have to be approved by the commission, which leads me to my next slide. Actually, in last year, the commission for the first time before enforcement was the Office of Enforcement comes to an enforcement action and they decided they have to go after it. It requires penalties, so they go to the commission, write a memo and say we need a penalty authority between $25,000 and let's say $1 million. It was very wide range of penalty authority. They had to get it from the commission, pre-approval to even go with settlements. That has not been the case since last year. The commission delegated authority to the director of enforcement to just go and do their job, which was a major step, honestly, in terms of enforcement. And it shows that I think a lot of people ask, like, where do I lobby? Do I lobby the commissioners, or I continue to also lobby staff members? Well, for FERC, I think staff members all still matter. So it's not just making a call to the commissioner and hoping that it will go away, because FERC staff is the one that is in charge, at least initially, to investigate any violations and then set up the negotiations and how much your penalty will be. You all know that FERC has a very high penalty authority compared to other agencies because it was given to them fairly recently, and I think it was 2006. So it's much higher than some of the other agencies. The traditional priorities, some of them are not going to be applicable anymore, and those are the ones that I kind of scratched there for you, and those will be no longer applicable, but fraud and market manipulation will continue to be a priority. It comes from the ISOs mostly. They have the market monitors, they see what's going on in their markets, and they give the information to FERC. That has always been the case. I expect that because FERC doesn't have many people, they will start asking the ISOs to give them a more kind of final and more baked case in if there is fraud or market manipulation when they go to FERC and alert them. Also, as you know, the traders also call FERC and say, hey, something's wrong. That has happened in the past. Reliability violations, I don't know if any of you are familiar, but all the utilities are subject to reliability standards, both for performance and for cybersecurity. So the SIP violations, those will continue. I don't see any specific changes in the enforcement of those because they're priority for any administration, including for this one, because they always say we want reliable energy, a lot of it, and at affordable cost. That has been the administration slogan. And it has been the prior administration, and if you go to Carter, it will be the same thing, right? So I don't think the NERC compliance will change, but on the reliability front, what NERC has said, the CEO has said, is that they'll go to trying to move to spot checks for the established reliability standards that have been there since 2006, mandatory, and will be enforcing more the new standards that come into play. A lot of that have to do with renewable generation. For example, registration of renewable generations, maybe some of the new SIP standards, those will be more audited compared to the other ones. Anti-competitive conduct, that will continue to be like a priority. Threats to infrastructure, this was a big thing, physical security of the infrastructure. But the impact on communities' environment, that's not going to be like, that last part of the priority, I think, is gone. Transparency in the regulated markets, that's pretty much market power. This will also come through the ISOs in general. So I think that will be the priorities. They are not going to necessarily change that much. It's just a question of how much FERC will enforce them. With respect to audits, I don't know if any of you are familiar, but FERC audits go forever. And I have friends who talk, and they're like, well, I was pregnant when we started the audit, and my kid graduated kindergarten when we finish it. I expect that to change, given the forcefulness of the new administration. I think they'll be able to close them much faster. The request for information will come like more regularly, as opposed to, you get requests for information, you give them the data, and then 6 months from then, like, you just wait, and then you get another one in 6 or 7 months. So we expect that to be like, now the audits will be more like fast turnaround, because FERC also has to show to the administration that they're doing something. They issue reports now, they have like on their website what they have done in the first 3 months. It's almost like a commercial for FERC if you look at it. It's interesting how they operate. So I expect the audits will turn around much faster. And if it's a serious violation, I don't expect them to be soft at all. Like, the Department of Justice is really hard now, and everybody should fear them. I think FERC will be the same in terms of serious violations, and those will be the market ones, intentional fraud and manipulation, those will be. And I think they'll continue to be more focused on power as opposed to natural gas, just the way that their jurisdiction works is more conducive to doing power investigations in general. They haven't had many gas cases. Tariff provisions are a big danger for utilities. If you don't have your tariffs all filed with FERC and approved, you can't really do transactions under the specific tariff that you have. That happens all the time, and it's surprising how people in the trading floor think that they can have a transaction with somebody, and they're not sure if there was a specific contract. I've seen it once only, but it was after the fact. So call your lawyer if you're not sure about something, it doesn't feel right, just call your lawyer and they'll tell you whether there is a contract that you can trade under. Otherwise, you have to return the money. It's like, that's the problem with tariffs. You can't trade unless it's filed with FERC. If you do, then you have to return the money. That's the first thing that FERC makes you do. The accounting, the specific systems of accounting, that's a big thing for FERC. Most of their investigators, when it comes to audits, are accountants. One thing I expect, if there is really new nuclear in a renaissance like everybody expect, I hope that FERC will actually start auditing nuclear power plants again before, like, we own a little bit, 17% of Palo Verde, so we do have nuclear operation. That has not been audited, and in general, FERC has not been focused on nuclear power plants, and how do you account for everything in your system of accounting for the nuclear specifically. There are like many regulations. I expect that they should beef up if nuclear renaissance happens in a couple of years to see that. And then you have the construction in work progress. How do you account for that? How do you calculate it? Those are the things that they look for. Affiliate transaction has always been big. I don't expect it to go away. The code of conduct, for sure. For some of you, it's probably applicable. It's applicable to us. So, transmission, marketing, stay away from each other. That rule still applies. But it's transmission, not generation, because we usually get questions about generation. I'm like, this is generation, just don't ask me that. And formula rates. So if you have a new formula for your transmission services, usually the rule of thumb from FERC is they give you a year and a half under the new formula, and then they come and audit you to make sure that you have applied the formula correctly. Division of Analytics and Surveillance is still there. They're the ones that usually do a lot of investigations related to the extreme weather events. FERC is always part of those investigations. I've been part of the investigation with Winter Storm Uri, and it was just terrible. Nobody wants to do those investigations at FERC, but if there is another event, and that was the one that involved ERCOT, almost going like completely blacking out. Hopefully there will be no more of those because FERC doesn't want to do them, but they continue to happen, and the grid is really not that reliable. So I expect that those will continue to be a priority for FERC in a major manner. And the last thing I have is FERC has 1,500 people in general. That's when they started in January. About 150 of those took the fork on the road. So you have less people. And then a lot of people retired. I expect about 100 probably retired and were forced into retirement. So now we have, 1,250. And then the chairman, Christie, said that by the end of the year, there will be 10% less people, 9%, he said, so like roughly 10. So you do the math, how many people they're going to lose. There's not going to be enough people to do that many investigations. So I expect that risk-based approach will really go to some specific issues that they really want to go after. If you have to self-report, now is the time to do it, in my personal opinion, because they just don't have the people to investigate every single thing with that level of detail, and might be more lenient towards self-reports. They will have a couple of rulemakings. Surprise to me, that's why I included in my slide, because nobody expected FERC to come up with rulemakings, but executive order just came in on Friday and say, consider rulemaking on wildfires, which is a really, really good idea if it actually happens. And also they have to issue a rulemaking on how long their regulations are going to be, the sunset, the so-called sunset executive order. As you know, FERC has rules that go forever unless they get repealed. Now, they'll have to just make them effective for 1 year, and then some can be extended to 5, but FERC has to explain which ones, which is a massive undertaking because it's not just the rules published in the CFR, it's the rules, every order, final order, it's included in those rules. It's massive undertaking. I have no idea how they're going to decide, but industry is trying to help them. We send a list to FERC and say, hey, this is the low-hanging fruit. Maybe we should consider those reportings to be, instead of every 3 months, every 6 months or something like that. So my expectation is that some of the reporting will be changed and loosen up a little bit because it really doesn't make that much sense for all of the utilities. And that's all I have.
All right, now I'm going to turn it over to Michael to talk about customs enforcement.
Thanks, Toby. Today I want to focus on really a critical issue, and that's U.S. trade and customs enforcement risks and what it means for physical commodities trading. So, I think that we're going to see the DOJ ramp up significantly its efforts to investigate and even prosecute trade and customs fraud. And we have to see this in the context of a broader government strategy to enforce the tariff policies that have been introduced during the Trump administration too, as well as the prior two administrations. So definitely we can expect more enforcement activity going forward. Now, in commodities trading, the stakes are very high, of course, because the tariffs are on key materials. So we have seen tariffs enacted recently on steel, aluminum. We're expecting a Section 232 action on copper and maybe even precious metals in the platinum group metals, that is. So as these tariffs have been increased, it is increasing the incentives for importers into the U.S. to violate the rules, right? And so understanding where these risks are can help us, our organizations, avoid these violations. So I thought it'd be helpful to start by taking a look at a few of what I would consider the main types of customs fraud. And number one right here is just simply the undervaluation of goods. So when we're the importer of record, we're required to declare a value of the import, quite simply, usually on the 7501 form. And it's a pretty strong incentive right now with the tariff rates where they are to undervalue the goods. Now, this is a particular risk in the commodities space because we can have some complex pricing formulas. We can have variable pricing. We can, certainly the prices themselves are subject to quite a bit of volatility. So, not only is there the risk of intentional fraud, but we have to make sure that we're getting it right when we report the declared value. So, very important area to focus on. Another quite obvious area for potential fraud is in the misclassification of the goods. So anybody that's been involved in trade compliance understands the harmonized tariff schedule, right? HTS, and how many tens of thousands of different codes there are for the different goods that can be imported. Now, the good news is that in general, for physical commodities, it's a little easier because we're not necessarily importing washing machines and automobiles. But on the other hand, there can still be different codes for different grades of material, different types of material. Steel products, for an example, with different alloy compositions, aluminum products with different alloy compositions, or even in the precious metal space, you can have a different HTS code between a bar of platinum and powdered platinum, which we refer to as sponge material. Different code and a different tariff rate. So clearly misclassification of the goods can result in a different tariff rate being applied. And again, there's a pretty strong incentive for, temptation anyway for firms to misreport. Country of origin, right? Very important because as we've seen with the reciprocal tariffs, the different countries have different tariff rates. So right away, there's going to be a country arbitrage opportunity for an importer of record to import goods from one country versus another country. Now, what we want to avoid as companies and manage the risk is we want the country of origin to be accurate. We want to make sure that we're declaring that country of origin, really where the product came from. And one of the things that we also have to take care for is what some people refer to as token processing. So, if a company brings the material into a company, makes a very small change to the material, and then declares a new country of origin, will that stand up under a review? Maybe, maybe not. So we have to be not only be careful to declare the country of origin correctly, but also make sure that we're not engaged in any false processing. And then, of course, finally, there's transshipment. That's one that we're probably more familiar with in the energy space, particularly in the oil markets. We hear a lot about transshipment. What is transshipment? Well, it's quite simply taking goods from one country, bringing them to another country, changing the means of transportation, perhaps changing the vessel, perhaps just parking the vessel and then claiming that it originated from the country of its that it left last in its destination to the U.S. But clearly the CBP is going to be taking a look at, and they can access the ship records, and they're going to be very focused on transshipment as a potential for tariff evasion. So those are really some of the big risks that I see right now as far as trade compliance. Now, from the government's perspective, what are the enforcement mechanisms that they have? Well, the biggest one is the False Claims Act. And I think the DOJ has already signaled that they intend to use the FCA to penalize firms and maybe even prosecute firms or individuals. So one of the big things about the False Claims Act is that a company that is found to be in violation of it can be subject to triple the damages, right? So it's triple whatever the tariff would have been that was evaded. That's what a company could have to pay. So if you're talking about a 50% tariff on steel or aluminum, what is 3 times that? Well, it's quite simply 1.5 times whatever the tariff would have been, which is 1.5 times the value of the goods. So that's really what's at risk. And I think that's where we have to take great care to avoid those types of violations. What about whistleblower claims? I mean, I think we're all familiar with whistleblower risk in markets compliance, right? While we saw someone who was manipulating the markets, we saw someone who may have been spoofing. But how does that factor into trade compliance? Well, there's a particular process called a key tam lawsuit that can be filed by an individual, and that individual actually sues also on behalf of the government. All right, that's the definition of key tam. It's along as well. So individuals can take an action against a company for a potential violation of trade compliance rules under the False Claims Act, and they're going to get a cut of the penalty, and that can be 15 to 30% of the overall penalty. So what do you think that does to the incentive for people, both inside a company and external to a company, to make these types of claims? I'd say it raises it and creates a real big whistleblower risk in this area. Now, we know that CBP, Customs and Border Protection in the U.S., they have their own capabilities. They certainly have a lot of analytics that they can use. We know that they have all the ACE data because we can see it when we go into the ACE system. And don't we think that they're going to be looking for patterns, or better said, changes to patterns? And if a company has been importing goods under an HTS code for the past 5 years, and all of a sudden that HTS code changes, and that happens to be one that's assessed at a much lower tariff rate, wouldn't that trigger a red flag? Probably. Similarly, if a company's been importing from a good from a certain country or countries, and all of a sudden those countries of origin change, well, wouldn't that be a red flag as well? Particularly if the new countries of origin also have a lower reciprocal tariff rate. These are very simple analytics that CBP can run, and in my opinion, they are running them, and they're going to be looking for these changes in patterns, and I think it's going to be very easy for them to find these types of violations. CBP can also conduct physical inspections of the goods. They can use those physical inspections to assess whether or not the definition, the HTS classification is accurate. It may or may not, but I think one of the important points about that type of an inspection is that it can delay the release of the goods to be imported, and that delay costs money. So, even if it doesn't result in a violation, even if it doesn't result in a broader investigation, just a delay of the import can be costly to an importer. And then finally, we have criminal enforcement risk. So many of the tariffs, right, the reciprocal tariffs themselves were enacted under a statute called the IEEPA. And violations of the IEEPA can carry prison sentences. So I think that creates a whole new level of risk, similar to the risk that we saw for spoofing, right? So spoofing was considered, right, a nefarious market activity until Dodd-Frank codified it in the Commodity Exchange Act and made it a criminal violation. Similarly here with trade compliance, we don't think of it being a criminal violation, yet we have to consider that because when it's a violation of IEEPA, it is subject to that level of liability, and that's a real big risk. So what are some of the high-risk areas when we think about our physical commodities trading? Well, quite simply, we should be looking at countries that we're importing from that have high tariffs, right? If we're importing a lot from China, we should be looking at countries that may have a more antagonistic relationship with the U.S. When we think about where would CBP or DOJ focus their efforts, it's probably not going to be on the imports from the UK, right? So we have to do a very high-level assessment and look at our countries of origin and think about how we can tighten up our compliance and make sure that some of the elements that I outlined earlier are being reported correctly. What about the specific products? Well, clearly we mentioned steel and aluminum, and they come up, in any conversation about tariffs, right, on specific products. But what about other products? I think, as I mentioned earlier, we are expecting to see Section 232 tariffs on copper and potentially on PGMs, platinum group metals as well. So, any of those specific products that are subject to the specific 232 action, again, is going to be a primary focus of the regulators. And then finally, we have to pay attention to really all of the countries that have been subject to the reciprocal tariffs. And that doesn't mean, necessarily just the countries that are at, some very high rate, 50 or 75%, because the IEPA reciprocal tariffs, in my opinion, are going to maintain a baseline rate of 10% across the board. I don't see those going away, right? So right away, we're going to have, in my opinion, a maintained risk of those tariffs being in place on all the countries that have been named. And anybody that took a look at the executive order knows that that's like most of the world. So that's the risks. Do you want to go into what we can do?
Absolutely.
So that's the setup here. So we've talked about the risks. Now, what are we going to do about them? How can we avoid a customs or trade violation? And what are some of the basic steps that we can do if we're in compliance or legal or one of the other areas of our firm? Well, I think number one is you better have a very good classification system. You should have it reviewed. You should have it signed off. You might have it reviewed by an external firm to make sure that it's accurate. The most important thing is that it's current. There are different sub-classifications that are being developed all the time and deployed. And so the HTS is not a static document by any means. Country of origin, we talked about that a lot, but we want to make sure that the logistics team understands, the operations team understands what is the legal definition of country of origin, right? Not what we think country of origin is, but we have to dig into the regulation and look at what is the legal definition of country of origin. And it can vary sometimes depending upon whether or not a good was processed or not. How about some of the real-time trade data monitoring? How can we use analytics tools to monitor the trends in our imports, and try to flag any suspicious activity, whether that's changes in pricing, changes in the HTS classification, or otherwise. Some of the other ones I'll touch on real briefly: supplier due diligence and customs broker due diligence. That's just making sure that we're aware of who we're dealing with, that we're dealing with reputable companies, It can be as high level of a check as just looking to see if they've been subject to any enforcement actions. It could be talking with other firms in the business to say, hey, how's this customs broker doing? We want to make sure that we're dealing with not only reputable firms, but intelligent firms. Why? Because when the customs broker files a 7501, right, the import filing on our behalf, they don't have the liability. The liability for the correctness of that report accrues to the importer of record, and that's us. So we can't lay off that risk. Finally, a big plug for regulatory advisory teams, very important to have, a very robust in-house team of compliance and legal to make sure that we're not only reviewing the regulations and understand them, but that we understand them from the perspective of our business, right? We understand how they apply to our business, and we understand the risks involved, and we can provide guidance across the trading desk and across the company, whether it's in trading, whether it's in marketing, whether it's in logistics and operations. All of those are touch points for trade compliance risk. And then finally, as we all know, training is paramount. We can write the best policies and procedures, but if we don't train our staff to the level where they understand them, not just, hey, we did the annual compliance training, but that the staff really does understand what the rules are and how to follow them to avoid a violation, that's just very important for us to carry out as legal and compliance professionals.
All right, we have time for one question for the panel.
Everyone's completely compliant.
They must all be regulatory.
On the FERC, during the first Trump administration, we saw a very independent FERC that stood against a lot of the Trump White House priorities. And I was wondering with the new FERC if we're going to see a similar independence.
I don't expect that to be the case. I fully expect that FERC will be very much controlled by the Department of Energy, and also the people that will be elected for commissioners. Commissioner Chang is also expected to leave. She's one of the Democrats. They have to replace her with a Democrat. The minimum, it's like you have to have 3 maximum from one political party by law. So that's one way of controlling the agency. The other one, as I said, is Department of Energy, and they're already doing it. I think it was last week, Department of Energy issued order to keep 2 power plants in, I think it was PJM, operational. They're coal, they're old, and they couldn't reach an agreement with PJM on the pricing to continue operation. So DOE actually directed FERC now to go and come up with the pricing structure for those 2 specific power plants. It's my understanding on the press, like what I'm reading, is that nobody actually asked DOE for this. They kind of did it sua sponte to make a point, I expect. So that's the second way of doing it, is through Department of Energy to completely align, because FERC is part of Department of Energy. They've always been independent. And I said that yesterday when I worked there, we never check with Department of Energy on anything we do. We just make sure that we don't do the same work and kind of coordinate generally, but was never we never tell them what we do because we're independent. And then I think the third way of doing it is the Deputy Secretary of Energy is former Commissioner of FERC, Denley. He will probably have some say on how to control and how to work with FERC to actually align with Trump's agenda. So I don't expect it to be independent. And then the fourth thing is that every final rulemaking has to be sent to the OMB for review before it's actually published as a final rulemaking. I have no idea what the procedure will be if you send it to OMB and they said that's not good enough, you have to change it, because then you have to publish it again, and then defeats the purpose of fast regulatory, movement to catch up with industry. But there will have to be some kind of a public process once they receive comments and on that draft from OMB, which really they're not even familiar with the record. So legally, I don't think that will be very fully baked, but it will happen. That's my expectation. Thank you.
All right. So that's to join everyone to applaud our panel. Thank you, guys.